Good morning, everyone, and welcome to It Might Be This or It Might Be That, which is kind of a tongue-in-cheek reference. Because what this really is a review of my authentic morning notes and trading plan for the S&P 500 futures. Hello there and welcome. I am A.F. Thornton, Chief Investment Officer, and as we affectionately call me, the two-handed armchair economist. Because on the one hand, it might be this, on the one hand, it might be that, and I am not a trained economist. So there you go. But I do have 35 years of trading experience, and I am a math geek, and I write investment algorithms, and I have a lot of fun. And the name of our company is Blueprint Quantitative Strategies. And I wanted to mention we are new to YouTube, so we need your help. We need your help in lots of ways. First of all, if you like what you hear on this video, we would appreciate it if you'd give us a little thumbs up and a like. That will help us rise in the algorithms for YouTube and hopefully help us grow the channel. If you would like to join our community, please do so here on this channel. And also you can go over to our website at blueprintquantitative.com, which I'll give to you in a minute. But help us grow this channel. We're new, although we're not new to trading or in the investment business, we're definitely new to YouTube and Rumble. So we're excited about it and hope to grow this channel considerably in the coming weeks and months. Now, I always have to do the precatory language, but nobody ever reads it, right? So here's my version. So basically what we are saying here is, I'll tell you what, I'll let you read it. Basically, this video is being done to help you learn how to trade. It's not meant to be investment advice. You'd be crazy to take advice off the internet anyway, off YouTube, off anything, where somebody doesn't know you or know your personal situation. So we'll cover that later because I've got too much other things, too much other ground to cover. Again, would really appreciate your support on this channel. There is the website I promised to you, and let me, I'll turn that on in a minute, but here's both of our web addresses, blueprinttrading.com and blueprintquantitative.com, and our email is info@blueprinttrading.com, and we always say, remember, there's no E in Blueprint. So with that out of the way, let's get that out of the way, and let's get right to the charts and right to our outline. And we'll see what's going on out there this morning. But anyway, let me start by saying there's a couple of cruel tricks yesterday. Now, yesterday we had the opportunity to have our trading room. We do that on Tuesdays and Thursdays. We did a couple of nice trades yesterday, and we gained about 19 points on the day, but we missed the big one, which came in the afternoon. And if I have a few minutes, I'll show you why it was cruel. It was cruel because it was throwing a head and shoulders pattern that looked like it would go down and retest the June 17th low. And I'm sure a lot of people saw that, although anybody who really knows those patterns knows that that wasn't the place that you would typically see one. So I think that invalidated. But the one that really rubbed hard was we were forming a rising wedge right at the end of, right around 10, 11 in the morning, and it actually failed because what happened was people were shorting all morning and they got stuck short in the hole, and then everybody freaked out about midday, and we got a short squeeze going. So if you look on the daily chart here, yes, this was yesterday's bar. It was about a 100-point bar if you include the overnight action. And it probably fooled a lot of people. A lot of people thought we were going to come down here and retest the low. I certainly didn't, but a lot of people did. Now, I had also told you that we had been looking to add to Friday we put some about 10% to work down here around 37.48 or so. And we did that. We're using August monthly calls in the SPDR, the SPY. You could use QQQ if you want to do that index. We pretty much focused on the S&P 500. But I only took a 10% position because I didn't want to hold it over the weekend, big chicken. But yesterday, right around that same area, we went ahead and brought that position up to 50%. And we did that live in the trading room, even though this is part of our swing trading strategy, not day trading. So that did give us a nice opportunity. And you can see that the market is definitely rejecting this area and continuing that cradle trade I've been talking about. And that trade, basically you come off a low, you come back in and you test the cradle. Now this is a proprietary algorithm indicator that's has a volatility adjustment element to it. So you wouldn't necessarily have a cradle like we would, but it is something that we've called our cradle trade, and it's a pretty reliable trade. You can see it presenting here. You can see it kind of presented there. That's not a classic one. But of course, even after that rally, the market rolled over again. So, but there are a couple things I wanted to talk about, like what is it about this low that's got me focused a little bit more than the others? And there's a couple of things. One, this is coming on the 20-week cycle, which is a pretty consistent beat in the market. About every 15 to 17 weeks, we see what I would title to be a 20-week, nominal 20-week. I mean, nominal means it's named the 20-week cycle, but it never goes 20 weeks. It's always about 15 to 17. And that's a pretty reliable intermediate low. This is one here. We also have one back here. Oh, by the way, let me turn on a couple of other things before I forget here, because I know it's hard to see my cursor sometimes. So that's a low, that's a 20-week cycle low there, that's a 20-week cycle low there, and this is one here. So I do expect more of a bounce from a low like this than, say, one of these minor ones in between. So that's why I'm giving it a little more credence. And there's definitely a number of divergences on this low. A couple of things that I'm tracking almost every day is a couple of ratios. One is the XLP to XLY ratio, which is, kind of consumer cyclicals to consumer staples. It's kind of like a risk on, risk off indicator. And what you see here is that, basically consumer cyclicals have been underperforming, but they kind of flattened out here. And if you saw the XLY chart here, you'd see that even though consumer staples went to a new low, the XLY didn't, kind of put in a double bottom. So at least at the moment, that's a pretty positive divergence. The other thing, you could track is like the SPY to QQQ ratio. Some people run Bitcoin to SPY, but in any event, there are just a lot of things about this low that are a little bit different than the other ones we have. So that's why I've been expecting a little more of a bounce. Also, this is kind of a falling wedge pattern. It's not perfect, but you have 3 pushes, which is what you see in a wedge. And believe me, wedges aren't always perfect. So 1, 2, 3, right? And even if you're an Elliott person, that's a 1, 2, 3, 4, 5. And again, this is where we would expect to see a falling wedge, because a falling wedge usually is the first wave down or the last wave. It either comes in a 1 or 3 or a C wave. So it's either start something or end something. If it occurs in the middle of something, it's probably not a real wedge. So again, number of reasons that you could see the rejection tails here. There's definitely buying, and you could see it on the book yesterday. There's a lot of institutions there. And then the final thing I wanted to show you, and I think is also pretty cool if you've never seen our algos operate before. Let me take you over there, and let's bring that I've got 6 screens immediately in front of me, 2 at my side, and a couple at my waist. So let's go over here to our algorithm. And what you'll see, now this is the first, this arrow here is the first buy signal that we operated on. We made about 100-point gain before, raising our stop and stopping out of that. And coming down here, we are about to paint a second buy signal this morning. It's all going to depend on where this closes. Again, you can see the cradle coming off the algo there. I've got a little trend line drawn. And there's actually, even down here on the original low, you can see the divergence as the momentum rises up even though we went to a new low here. So that's your original buy signal. We're still in that buy signal. That's what the algo line is for until that breaks. That's really our stop line. So we've got some good money to work down here. We don't have much risk to stop, and it's kind of exciting. So we're pretty excited about it. And then when I'm day trading, I will drop this down. Now all of this is fractal, so it works at any time frame. So I'll drop it down to the 15-minute chart. These are the signals that we saw in the room yesterday. And this one didn't turn out too well, but this was the home run right here. And by the way, let me show you this wedge that definitely, and we're only in the room for the first couple of hours of trading. So we were out of the room by this time, although I did send out a little text alert to everybody. But I would not have taken this trade. And that's another thing, if something doesn't fit your plan, I don't care if you miss something or not, you don't take the trade. On Thursday, we're going to go over this in the room, and I'm going to show you something you could do if you wanted to just kind of go with the momentum. But that's your short squeeze right there. So basically yesterday morning, they hammered it, kept trying to hammer it. And when it came up here and crossed the middle, basically the mean at the 21 EMA, that's when people started to panic and realized that not only could they not get it below this low, over here they couldn't get it below the June 17th low all the way back here. And by the way, there's that head and shoulders, left shoulder, head, right shoulder. And I'm sure people saw this and said, man, we're going down. We're going to go down, at least do a retest. But that's why I wrote this algorithm. And this is the dashboard up here, by the way. And you can see, at least on the 15-minute chart, are the primary algos in the accumulation mode. The wave state's bullish, the trend state's bullish, the strength, anything over 25 is good. It is telling us, though, on the 15-minute time frame that a trend reversal is imminent. And it automatically sets the stops for us. And this gives us an idea of the range of the bars. So coming into this morning, now this isn't overnight data, this is just regular session data. And you can see these E's painting right here are exhaustion signals. And you can see that we did get a red sell signal that painted at the end of the day. So our trades were here and here. Had I taken that trade through the end of the day, I'd be out of it at the end of the day anyway, but that's another story. We'll cover that in the trading room on Thursday, and I hope you'll consider signing up and joining us over there. So that's a little on the algo. Red flags, obviously, a recession is looming, and that's causing some significant changes. Treasuries are rallying, rates are falling, practically plummeting, and of course, we're seeing a rotation out of commodities, out of the metals, out of the industrials, back into, well, yesterday, tech. I mean, the NASDAQ 100 really led the charge yesterday while energy puked. So anyway, there is some change. I'll talk about that in a minute. Today, these are after 10 o'clock. or around 10, we've got some ISM reports coming out, including prices paid. We've got some job openings. Of course, the FOMC minutes come out at 2 o'clock this afternoon Eastern. I remind you, it's pre-warning week, and I'm still watching junk bonds. They're practically on the verge of a new low, which I don't think would be good in the sense that it could spill over into stocks. I'm also watching the emerging markets. When you get into these modes and recessions and things, you're looking for things that might blow up, like the plunging Japanese yen. So these are just the red flags I'm keeping my eye on. But I would not trade before these reports come out at about a half an hour after the open. And if you trade, you might trade ever so briefly. I mean, the FOMC minutes could move the market, although I can't imagine what they would say that would be a surprise. I mean, I would think that they're going to be very aggressive. So, but I wouldn't trade. I wouldn't take any serious positions till that stuff's out of the way. So it might be a quiet day. I know I haven't had much sleep, so I'm probably not trading today at all. So anyway, the only a couple of other things I want to mention just quickly. Folks, we're at peak inflation, at least for the foreseeable future. I could go on and on about it, but, no matter what you look at, let's just take a quick peek at a couple of things. Let's start with commodities. Here's agricultural commodities. And you can see it's just ripping to the downside. And here's commodities with oil. You can see our algo trigger line on there. So these things are plunging right now. Oh, let's see. You could kind of look at basic materials is another one. Lumber. We could even look at, some of the things that were concerning us, like we could look directly at oil and wheat. I mean, this stuff is screaming recession. So, but the good news is, I guess we get a bit of a reprieve at the pump. Dollar was climbing yesterday, still looks kind of like a topping pattern. So anyway, inflation is not the problem right now. Deflation is now going to shift into high gear. And we already know there's bloated inventories. There's going to be a lot. By the way, it's going to be a great time, kind of a Christmas in July, a great time to buy stuff at the stores because they're going to be heavily discounted. So you've got, basically sort of a reversal of everything that's been happening, rotation out of the inflation trade into the deflation trade. And obviously, since technology is very interest sensitive, it's going to benefit from the falling interest rate. So keep that all in the back of your mind. Things have changed. And always remember that the government, well, first of all, the Fed's always, fighting the last war. And all their statistics are a month or two old by the time they come out. It's not telling us anything about what's going on now. So never forget that. Anyway, let's build our sandbox. And we'll just copy that over to here. We'll build it on an E-mini chart or E-micro. That's what the trading range room is also new. That's on Tuesdays and Thursdays for the first 3 hours, 2.5 to 3 hours of the market. And the first week we did it, I paper traded because I didn't want to be distracted. And we've been working with the micros since then. And we'll be doing the minis later. But I always recommend people start with micros because it is still real money, but it's not something that's going to get you in a whole bunch of trouble. So looking at, if you'll remember, if you're new here, every week and every day we build a sandbox. And the reasoning behind that is you can clutter up your charts, ad infinitum. And good luck trying to trade with that. Like, for example, you'll see that I use kind of a black and white candlestick strategy, because after a while these colors start driving me nuts. Your charts begin to look like a Christmas tree. So to start with, I always want to know what the weekly expected move is and the daily expected move. That tells me what the volatility range for the market is expected to be today. And that's based on options pricing. I don't have time to go into it in a morning session, but that's where we always start. And so let me just open that up. Let's just look at our daily range. It's a little faint here, but this is the range we're expecting today. It's about plus or minus 50 points or so. And that's our weekly expected move. And I usually divide that into quartiles. The bottoms are green, the tops are red. If I'm going to short, I'd like to short in the top of the range. If I'm going to go long, I'd like to go long in the bottom. But anyway, there's the rectangle for the week. And there's the rectangle for today. So I am primarily interested on anything that's going to hit in here that can either provide support or resistance to the market. So after I do that, I simply just start clicking things on and off to see what I might encounter. So that is the weekly 21 EMA, which I consider to be the mean on the weekly chart. And by the way, I think that's a great target for where this rally may take us, but notably it doesn't land in our windshield today. So I'm going to turn that off. I'm just having awareness of it, but it's not going to show up in my windshield today. Now there is the 5 EMA from the daily chart. And by the way, the 5 EMA is going to be support or resistance. It will really be the dividing line between a bull and a bear, or between a decline and an advance up on the daily chart. So normally if we're going to stay in a decline, the market's going to reject here. So I definitely want to keep that on and on my radar today because it's landing right in my windshield, right? There is the daily 21. Now that's the mean on the daily chart. We talk about regression to the mean. That's where if we get too far below it, we snap back up. If we get too far above, we snap down. So again, that's right in our windshield today. So those are going to be important levels to watch. And I'll give you my philosophy on that here in just a minute if you've never heard it before. And then this is the algo trigger line from the daily chart. That's the cradle, that the cradle trade is coming off. And you can see why we were taking positions there. When you're coming in here or here, your risk to stop is low. So it was a good area for us to load up and begin to take a swing position. And we're now at 50%. We did 10% here last Friday, and we did another 40% here yesterday. So those 3 lines I'm going to pay close attention to today. And then in our immediate time frame, this all depends on what chart you're trading, but whatever time frame you're trading, I usually do a 5-minute or a 2-minute. You're going to want to keep track of your mean, your 21 in that period, and I also run the algo trigger in that period for that period. So, and again, I could care less what moving averages do, and I think they're lousy indicators, but what I do know is retail traders pay attention to it, so that's why it's relevant to me. Otherwise, I wouldn't really care. By the way, the 50-day is also on our radar up here, but it's a little bit out of our range this week, so I'm not going to really pay a lot of attention to it. The other one I like, whatever time frame I'm trading in, I've always got the 89 on because that's really should be the threshold between longs and shorts for the time period that you're trading. We'll talk about that another time. The other thing I'm going to be paying attention to, so again, we're going to, whatever our trading period is, watch the 21, especially on the 5-minute, and make sure you're paying attention to those levels up on the daily chart. Other than that, I think you want to, this is sort of our volume profile that we've been trading lately. It almost looks like a head and shoulders sideways. So these high volume nodes are hurdles to get over. They act as support or resistance depending on the direction you're coming from. And we've been this is basically a balance area, and I'll show you that in a minute. And balance rules apply, but this, staying above this level here around 37.77 in the short term is pretty significant. Our next major resistance in our windshield's up around 3,900, and our support in the windshield is about 36.75, and that's close enough to the June low that I would use that as support. So again, just building what may show up in our windshield. These are important areas of support and resistance. And then I want, this is again that algo trigger line from the daily chart. That's my absolute stop. I don't want to be long in this market if it gets anywhere, it starts closing hourly bars below that, I'm out. The 52-week low is, of course, the June low there. I'm just turning things on so you can kind of see how I look at it. This is a small balance range, especially when you get down on the 5-minute chart. Go over to the website, blueprintquantitative.com, and go to the glossary and look up our balance rules, because those apply today. And basically what they say is if you look above and fail, you're going to go all the way to the other end of the range and vice versa. If you look below and fail, you'll end up going all the way to the other end of the range. It's kind of a setup trade. These are our supply lines coming down. We've got the short-term one here. We'll have to work on getting through there. It doesn't look like we'd hit these other ones in our current range. And then you'll see some fib lines here if we look at the entire down leg that we're in. This is a 61.8 retracement. That's the 50% retracement, which is basically where we are right now. And that's the 1/3. So, usually if we can get past the 61.8, you're fairly assured of this trend reversing, at least in this shorter time frame. Keep in mind also that when you break out of a balance area, you can basically double that range for a target. So if we break to the upside, we're going here. If we break to the downside, we're going here. Doesn't help you much right now, but at least you know. And then, of course, we've got a demand line here. So, again, just trying to focus on the target here. What is going to show up in today's window and in this week's window? And you can give yourself a little latitude on either side of that, because you can break outside those range during the day or during the week and still come back inside. But this is going to help you focus, because you just trust me on this. If you don't narrow down what you're looking at, you are going to have a hard time concentrating. You're going to have a lot of conflict in your trading. So I wrote down here for today's plan, what's our upstairs trend on the daily chart? We're still in a downtrend, right? I mean, that's pretty clear. Lower highs and lower lows. However, because we're in this consolidation here, this actually a mini balance range here and a larger balance range here with formidable resistance at 39.30. I mean, you want to talk about a high volume node, that's where the rubber meets the road, and that is not going to be easy to get into. You can't see it on this chart unless I expand it out a little bit, but it's basically associated with the February. There it is right there. It's one of the highest volume nodes on the whole range, and that's where we stalled. It's also pretty close to where the 21 in the mean is. There's the 50 up there, and this is again daily candles. So our upstairs trend is still down. Resolve all doubts in favor of the downtrend, but our short-term trend appears to be moving higher. Now, if we take out this high, or if we take out this low, we're still in a downtrend. We take out this high right here, Now we've got a true reversal. So there's your sandbox, and I noticed the bell just went off, so we're going to have to get out of here. But as always, think like a retail trader. Don't act like one. The reason you want to know are these key levels is because that's where the stops are. And your job is to lean against something to get into those stops and take a nice profit. Don't forget to look left for different areas that people might put stops. And don't forget to look in the book for resting orders, etc. Apply balance rules today. Watch out for the Fed meeting. And I didn't see an opening trade today, which is why I didn't mind running over a little bit. But anyway, have a great day and a great trading day. And let's see what the Fed has to say. And I'll be back again this afternoon. Bye-bye.